Welcome to the BadgerCast, where we talk about Bitcoin, yield farming, and the future of decentralized finance. My name is bveCVX. Nothing you're about to hear is investment, financial, or spiritual advice, but merely the personal opinions of a rotating cast of internet badgers. Check us out and learn how to put your crypto to work at www.badger.com. Hello, welcome to the Badger Podcast. It is bveCVX here with Tritium, and today for the first time we are welcoming Prince Tok, who is a kind of OG member of the Badger Discord and user of Badger, in addition to several other DeFi protocols that we're going to be talking about today. So today we're going to be going over kind of the latest updates in the Curve Wars and how that relates to one of our main vaults at Badger, which is the vote-locked convex vault. And then in chapter 2, we're going to be talking about how we are extending that playbook into other chains and ecosystems, in particular the Phantom Solidly projects that have been coming out in the last few months. So I don't know, Prince Tok, welcome. It's awesome to have you on here. Do you want to kind of give a quick intro of yourself and what your sort of niche is in crypto?
Yeah, thanks, Wasabi. Thanks, Trit, for suggesting that I join. Happy to just give a little bit of my background. I'll try to keep it short because I think it's typical of most people's path to crypto. So I graduated with an engineering background, pivoted immediately into finance, and was fortunate right out of college over 10 years ago. So I'm probably older than most of the folks who kind of degen around Discord to Discord. But I joined to finance, and I was lucky to pretty early on be earning kind of six figures. And so I come from a different background from that perspective. And I just was kind of head down thinking that I was going to spend the next 30, 40 years of my life kind of running the rat race, new titles, bigger paychecks, and kind of enjoying those creature comforts. Went to top business school pretty soon after that, and then joined probably what is one of the most famous Wall Street financial firms. And I've been there for the last 10 years, still there today. And all throughout that time, I was building my first gaming PC. I'm a big gamer back in 2012, 2013. I just always think back if I just turned on some Bitcoin mining, just how different my life would be today. But, like most people, you hear about crypto for the first time and you don't really pay attention. So fast forward to 2017, ICO mania, and just being in finance, always had CNBC on, and every time Bitcoin would go through one of its crazy bubble cycles, you would kind of hear about it, but again, was really kind of heads down, not paying attention. But 2017 came around, it was hard to ignore. So by that point, I had a little bit of a nest egg, and so I bought a whole bunch of stuff. I bought a little bit of BTC, a little bit of ETH. But I was buying, I thought Sia coin was going to take over the world. And so I was buying all those kind of things that eventually went to zero. And so when the crash happened, bear market started, I was all on centralized exchanges. Fortunately, I didn't sell anything, but crypto, receded into the background. And then it really wasn't until, and so I missed DeFi summer. I was really bummed about that because, again, I think about what would my life be if I had been there, early 2020, but it was late 2020, early 21 when the dog coins were going kind of crazy that finally it really clicked for me. And I started really listening and reading and all about kind of crypto and DeFi, et cetera. I'm probably the only person who at the time where Doge was ripping, who lost money on Doge. But I always look back at that as A, nice little tax write-off, B, it was really what got me crypto pilled. And so pretty soon, so this is all of 2021. Now, I have all my kind of boomer stocks, but I was starting to say, okay, I think about all of this from an investment perspective. I said, okay, let me put 25% of my paycheck into crypto, the other 75% safe. And then pretty soon it was 35%. And then pretty soon it was 50%. And then pretty soon I was like, well, I got all this locked equity that I can't touch. And I sold all my boomer stocks, and now I do 100% of my paycheck into crypto. So at the end of every month, pay down all my credit cards, leave myself $1,000 in fiat, and the rest goes into my investment portfolio.
Straight
and I really
into
do
shit coins.
Straight. Well, I like to, I own some Badgers, so come on. But let's. But I'm degenning. I'm trying out new protocols. I've sent some ETH into black holes that'll never come back. But I do think of it as a portfolio. I think of I'm always rebalancing to that portfolio. I'm kind of agnostic to price movements. It's all about just getting general exposure. And so I have ETH as a bedrock part of that portfolio. And then after that, I'm huge into the convex curve ecosystem, which I think we'll touch in a lot. And the last thing I say, I know I've been talking a little bit, but it's surreal to be doing this podcast within the Badger ecosystem, because I distinctly remember gearing up to listen to Spot a Boom on Frog Nation radio podcast, and so it's kind of in some ways come full circle. So, and I'm a Badger punk. I was in Badger ecosystem early on. There have been times where I've been in and out of using the strategies, using the sets, but I've always maintained that punk PFP for Discord. And I do think it's because in a lot of ways, the Badger community is pretty quite strong. And I remember Trit said in a lot of ways, that's because a lot of the core members came from the community. And so it is pretty special that way.
Awesome. Awesome. I know we've got a lot of stuff to talk about, but I can't resist asking you this. So like when you're like degenning in the basement of Goldman Sachs or something, like
Yeah.
when are the institutions coming to buy our bags? Like are you secret in crypto? Are you like out of the closet? Are you getting your colleagues to degen along with you? What's like the kind of like institutional temperature where you are?
No, that's it's a great. So I'll say I've crypto pilled a lot of my business school buddies, and so we're all degenning and much to their wives' chagrin, putting a lot of their assets into crypto as well. So they're doing a lot of that. I'll tell you from the inside looking out that not only are the institutions coming, they're here. Literally just earlier this week on kind of an internal conversation, there was a big talk from our CIO in front of the entire firm outlining what Bitcoin was, what Ethereum was. Satoshi was mentioned, Vitalik was mentioned. And so not only are they coming, they're here.
Awesome. All right. Well, so we have a lot to get into today. You were a big part of the community that was engaging around BIP 87 that just passed, which was a kind of rethinking of the strategy, our voting strategy, of what we're going to do with our CVX that we get locked in the bveCVX vault. So we're going to kind of get into that here, and Tritium's going to kind of take us through like the changes and what led us to what we learned and what led us to make these changes. But I don't know. I would like to get your perspective as someone who is big in Badger, but also like really deep in the Curve Convex ecosystem. So we've done a whole another podcast, an hour and a half on the Curve Wars. So we're not going to kind of like do Curve Wars 101, but like I just do want to get a update since the last time we did one of these, because a lot of stuff has changed. You have more DAOs buying Convex. You have the Curve V2 coming out, which is bringing in different types of pools. So Prince Tok, do you want to just give us like a quick, like, what are the big headlines of changes to this ecosystem that have happened in the last few months?
Yeah, it's funny. I was just talking, I'm in all these discords, and it's funny when you see the same faces over and over. And I was just talking to one guy, and I was asking, I was like, man, do you still have your I'm not even say the name because I don't want to talk bad about any protocols. I was like, do you still hold this bag? And he was like, no. And we were reminiscing because it was only a year ago where protocols were paying emissions hand over fist to rent liquidity, and direct liquidity mining, and just how much the ecosystem and landscape has changed over the last year. And naturally, part and parcel to that is what has become the curve wars and convex coming in and changing everything. And I think when convex first launched, and you were getting 100% APY on curve and convex directly staking, I don't think people really kind of saw the vision on what V2 would do to change it, because everyone had looked at Curve just as a stable coin place. And so, obviously getting stable coin liquidity is super important, but it's kind of like there where people stopped, looking forward. And when V2 launched, it was actually even before V2, it was when the Try Crypto pool launched. I think everyone that kind of blew everyone's mind. They said, okay, wait, this is super interesting. We have kind of the most traded pair, which is USDT and Bitcoin. Now you have a path directly to liquidity to Ethereum. And given kind of the crazy kind of calculus that Curve comes up with, might this be the best place to trade those most traded assets? And then when V2 launched, and then so you had, CVX, CRV launched, suddenly people said, okay, wait, this is going to change everything, because there's going to be protocols that are going to come and want to be traded in a centralized place that has a ton of liquidity. And I don't know if this was the and then governance dropped. And I don't know if this was I would love to hear the Curve and Convex guys talk about it, because I don't know if bribing was on the roadmap from day one. But when that launched with, what was it, bribe.curve or whatever, the site from Andre, when that launched, and then Vodium launched, I mean, DeFi changed forever. And credit to the Badger ecosystem and the leadership in time in place at the time, because you saw it in a way a lot earlier than other folks. And so when you listen to, again, I listen, I 90% of my spare time reading is crypto, listening to podcasts, and every time they're talking about Curve, Convex, or whatever, and they list the top protocols that hold CVX, Badger is always right up there. And then so I think, just taking a step back and looking at Badger specifically, the bigger issue has been, okay, we've accumulated a lot of CVX and CVX voting power, but how do we there's a tug of war there between the CVX, given that you do offer liquidity, which is a big feature. How do you keep the CVX in Badger? How do you compete and give CVX holders a great yield? But then how do you actually, weaponize that voting power all at the same time? And so that's been I think the push pull for months, right, Trit?
Yeah, I'd say so. I mean, I think that's the real challenge, right? Like that's what we've learned. So basically over time, as this bribing environment has developed, it's at the point where like $1 in bribes buys something like 125 or 130 in emissions, right? It was like for $1 bought $4 before.
Yep.
So like in this environment, actually, it used to be like if you're a DAO, you can buy CVX, you can use it to vote, you can bribe, you're going to get like 4 times the value in emissions, right? And that was like super efficient. Now it's a little more efficient, but it's not that much more efficient. And so like the whole situation is different. And the challenge we've had is like we've got this CVX product with a bunch of CVX maxis who just want to, like they want yields on their convex, and it's a single asset staking thing. And that's nice for them. But what that means, and like what we learned when we were doing research around like who the users of our sets were, is that most of the convex holders aren't actually interested that much in the rest of what Badger's doing, right? Most of the convex holders are just there to farm their convex and get yields. So then the question kind of that we've been struggling with, and I think we've hopefully made some good progress on, is like, how do you do that, right? Like, how do you give the people that are looking for yields good yields, acceptably good yields, while still managing to like eke out some amount of like influence in order to support things that the DAO wants to support, and actually to get, the value that convex was supposed to be for, other than earning bribes out of it. And I think that's, what we've learned is that that's kind of about having a lot of convex locked and then just taking a small enough amount that it doesn't bother anyone too much, and that we're really providing enough utility to make up for like the fees that we're taking.
Okay. And what about like, it strikes me that it's a really huge change. So going from Curve as a place to do stable swaps, to Curve to a place to trade, Curve is a place to trade any pair in DeFi, right? And you still have the same amount of Curve and Convex votes that are doing voting for emissions on a number of pools that's now like vastly larger. So how does that change kind of like the dynamic? And I'll send that to you, Prince Tok, and then Tritium, I want you to talk about like Badger's personal experience of launching its own Curve pool for the Badger token and how that went. But like, Prince Tok, what's kind of like the implications of this like massively larger and increasing number of pools that are competing for emissions?
Yeah, I mean, it's everything. First, it's made navigating Curve.fi a lot harder, right? You go to the pools, and there's, you're scrolling your thumb wheel for multiple clicks just to get to where you're looking. And so it's not only competitive now for emissions, like the competitiveness that we see today is only going to increase over time. Come August, when Curve emissions drop another 15, 16%, as they will for the next 298 years, it's going to continue to get more competitive. Right now, if you are a new protocol and you want to launch and you need liquidity, you're not going to go to Uniswap or SushiSwap. Maybe you'll look at Uniswap v3 if you have that kind of technical prowess, but you want to go to a place where you can spin up um, liquidity. You can spin it up pretty quickly, and you have a method of bribing or incentivizing your pool so that you'll get that liquidity pretty soon. That was pretty hard and pretty expensive, again, just 1 year ago. And so, and then I also think that just that there's a huge benefit of being on Curve versus other platforms, just given, we've seen a lot of stable coin pools depeg. MIM famously is very depegged right now at like 93% MIM, 7% 3 curve. But you can still go swap one MIM for 0.987 USDC, which with a pool that imbalanced is pretty good. And so if you want to launch a stable coin, there's no other place you're going to go than Curve. And then if you're going to come to Curve, then you need to have a convex Vodium strategy. And if you don't, then you're not going to succeed. And so that's when I mentioned early on when I said DeFi has changed forever, is that your first stop is being dictated for you, and everyone is kind of spinning up the same strategies out of necessity.
I think I kind of agree, but one of the things that I've been looking at is like, you're definitely right about like stable pairs, right?
Yeah.
So V1 pools, no question. Like if you want to launch a stable coin, I think Frax has proved it. It's been proved so many times that that's what you need to do. But like when I look at the voting, like what occurs to me is that I think a lot of DAOs are using it, but actually like they don't have that much convex, right? So if you look at the V2 pools, very few of them are actually getting much vote weight, largely because the DAOs that are trying to launch don't have a lot of convex.
Yep.
And then again, because they're bribing a little bit, but because that bribe premium is so low, right? It's not nearly as cost effective as it had to be. So like one of the questions that Poe and I have been asking is like, it seems to us like the the 1 to 120, 1 to 130 kind of bribe payout to emissions in makes the whole system only really winnable or playable by very large players who have like large pool capture like Frax, right? They're killing it there. And so one of the questions we have, like, and we can talk about this more later, looking to the future, is like in V2 land, right? Is something going to happen to lower that premium or to help like these like V2 protocols get into like a pretty late stage game so that they can have a significant impact there, right? Or I think if not, then what you're going to see is other influence wars pop up that are a little like earlier stage, and you might see a lot of these protocols trying to like play those same moves there where it's just not so late stage and where it's a little bit easier to get a foothold. Because I do think, like, Badgers, we've been in this game since the beginning. We've got like almost 1.7 million convex. It's easy for us to like take a bunch and do something with it.
Yeah.
But if you're a new DAO, like, CVX is expensive and bribes are expensive.
Yeah, and it's. I wonder. So I completely agree. It's getting, and so it's no surprise that the early V2 pools that have been successful is the Frax, Yearn. You guys were able to spin up the bveCVX pool, and so it's going to be those big protocols early on. I wonder if we get to a stage where you see more of what you saw with ALCX and the D3 pool, where you have some of these smaller players band together, because you're right, it's dangerous to go alone, and you need a lot of startup capital day one. I remember listening to a Sam podcast on Frax, and he was like, by the way, I have extending hand to any protocols that want to partner with us, and we'll help bootstrap your liquidity, and we'll help get your pool some liquidity, etc. And I wonder if that's where you're going to get that second level of the meta game where you have protocols doing more things coming together.
Yeah, I agree. Or tokamaks, or like it makes that the meta layer starts to get interesting, right? But again, like it's the thing, and I don't know, like if you can figure out, and maybe we should move on. If anybody figures out, please get in touch. Like, we've spent so much time just thinking about the situation, and from like a macro curve war situation, right? So just thinking about the macro curve war environment. as long as that bribe ratio is so tight, right? As long as there's so little room for arbitrage between voting and emissions, right? Like it's pretty hard for anyone to do anything that's all that significant, right? You've got like this 20% to play with, but that's not a lot, particularly not in DeFi. So like we'll see. Like,
Do you know the one benefit there, though, I'll say of the Vodium platform is that there's so much delegated weight to Vodium that let's say you spun up your own pool and you dropped it on SushiSwap and you gave those same emissions, which are 20% less efficient, you may still not get any liquidity. So, but at a minimum, you launch a pool on Curve, you get a gauge, which is no small feat, but you know that because of that huge delegated weight, that when you do put your bribe token in, it's going to translate directly to votes, yield,
oh,
and
yeah,
liquidity.
I
And
agree.
so I think that's a kind of underrated aspect of the whole convex ecosystem is that huge delegated weight, and so you're never wasting bribe, or
I
emissions.
agree. And, I think Vodium's a great solution. It's just
Yeah,
like the economics of the situation. And again, I think there will be more wars that start, right? Like other
yeah,
than the curve wars. And then there'll be like more places. And hopefully that premium goes up a little bit. But you're right. Like, is a small protocol. And I think the thing is, like, unless you're VC backed, right? Unless
yeah,
you're a small protocol with a lot of money, it's pretty hard to start on Curve because you don't
yeah,
really have enough to get the efficiency to get it going on, right? If you're a little bit more developed of a protocol that's like Badger, right, that's maybe looking to move your liquidity to something
yeah.
more efficient, or if you're coming in with a bunch of VC bags and right, like have some millions of dollars to drop on bribes at first to get things started, yeah, then it kind of looks more interesting. But yeah, let's move on. But it is like we're in a very interesting state of like the curve wars, and I think what we're going to see in the next little while is that there's new battles that have to open, right? Because this one is getting pretty like settled.
Yeah, it's almost like it's one, right? It's not one, but it's. I think the players that are in the curve wars today are probably and who are doing really well are probably going to be the same that are going to be doing really well in 6 months to a year. Now, don't quote me on that. Crypto changes incredibly fast, but there's huge barriers to entry, like you mentioned.
All right. So, Tritium, can you talk quickly about getting Badger spun up on Curve and how that fits into our overall treasury controlled liquidity and what options that opens up in terms of what we can do with our CVX?
Sure. So we first spun Badger up on Curve. We first brought the pool up, I don't know, like a month or two ago. And I remember it was like, like I think Spotto was working with like somebody, Michael at Curve or something, and they got all excited and they were like, let's launch this pool. And we just kind of like launched this gauge vote. And then the convex community was like, like, what's your plans here? What are you going to do? And I was kind of like, well, we don't really know. Spotto's point was like, well, like, let's just get a gauge now because they are hard to get. And like, we've got a bunch of devs that have a bunch of convex that are like excited about this. And so it's just going to be easy to get it passed. So he kind of did that. And then there was like a week or two of like, when are you going to do something with it? But we were in the process of like reevaluating how we handled CVX, right? So we had kind of come to this realization that like 80 to 90% of our CVX holders didn't have any IBBTC, but the primary thing that bveCVX was doing was supporting yields on IBBTC, which kind of then meant that like it was under yielding, people weren't getting the value they were looking for out of it. And we kind of went through this process of through about like 3 or 4 voting rounds discussing as a community like what people wanted it to do in doing that. So we were kind of going through this whole process. Shoot, I forgot your question. Could you ask again?
What options does having the pool on Curve Convex open up for Badger in terms of like being able to vote for it, buy pressure on the Badger token, that side of things?
Okay, so anyway, so then we kind of got to this natural state of things, right? And it finally became time to vote for Badger, right? The nice thing about Badger is we have 1.7 million CVX now, right? Like when Convex unlocked everything and relocked, obviously people liked the conversations we were having and liked what we were doing. And so they joined. So what that means is like we can just take up 5% of our vote as a fee, which is what we do right now, right? And that's like 75, 80,000 CVX that can vote for WBTC Badger. if you look at the convex V2 pools, as I was saying earlier, right, most of them don't have that much convex. And so very quickly, by just taking, a very marginal fee from our net convex, like we were able to really turn on a pretty big fire hose of emissions going to WBTC Badger. The result of that is that there's now about, I think, $2 million in the pool, and the yields are like over 100% on curve, and I think will be like a few 100% on convex. So I would expect, hope, maybe, predicting curve math is a little hard, right, that we can get $20-ish million in that pool. We've got about 12 million in a sushi pool. Some of that may leave, but even then, that's like another 5 or 6 million Badger, right, that are going to be in LP at work instead of on the market. And then the other thing we're doing is taking some of that vote weight and actually buying Badger to emit to LP. And so in general, I think where we've gotten with bveCVX right now is that like we're using 10% of it to somehow or another, or in some way or another, support the Badger price, right? We have a significant amount of it, which means that Badger's getting pretty good, significant support, right? Both in terms of buy pressure and in terms of like yield and utility. And at the same time, we're still able to deliver competitive yields to convex holders, right? So we're still able to have a product that like people want to be in, even if they don't care about Badger. And I think that's pretty cool.
Awesome. Go ahead.
I was just going to say, I think that whole process was really interesting. Again, since early 2021, I've lived on Discord. I've played small parts in governance over time, but this was probably kind of my most in-depth kind of soup to nuts, just having conversations with team and devs and seeing like actual implemented changes, which I think are for the best, and I think the community thinks is for the best. And it also, as someone who was, when I got in DeFi, I had BTC, I had ETH, but I pretty soon, you could probably characterize me as an ETH maxi, though one of my largest bags is Try Crypto. So I feel like I get my BTC exposure there, but I don't own, I'm not in the IBTC pool. There were times where I was in the OBTC, HBTC in my early days of experimenting, but right now I don't own any Bitcoin outright. But I still am in the Badger ecosystem because I think there's a lot of value in the sets and the products and a lot of the conversation. I think what BIP 87 does is it aligns someone like me who is not necessarily a BTC maxi, but gives me value to not only be in the ecosystem, but a reason to hold Badger and expect upward momentum. With the change with Boost and utility to that vault, I think makes it that set makes it more attractive place to put CVX than almost anywhere, just given the optionality. And then it's now self-sustaining, as I think Trit was mentioning before to folks who aren't familiar, is that set that had that 1.7 million of CVX wasn't earning the DAO any fees. It was actually costing it was net negative, kind of on an emissions basis perspective, and it wasn't sustainable. And so what I think with the utility, with the turning on ecosystem support through that 15% allocation, I think it really ties everything together quite nicely. And there was a lot of spirited conversations on the forums and in the Discord around that, and to be a small part of that is pretty cool.
Yeah, I mean, I agree. I feel really good about it, right? So I think at this point, and I wouldn't have necessarily said this before, but at this point, if you hold CVX and you're not actively engaged in the community, if you're not actively voting and managing that and making decisions that are like somehow significant to you outside of what else you're doing, like bveCVX is the best place to just put your convex and set it and forget it, right? And before it was questionable, but I think now I can pretty definitively say that, and we have a really good, strong option for somebody that just wants to farm their convex, which I think is great.
All right, so Tritium, can you just give us a quick rundown of the changes like all the changes that were in BIP 87, which is the changes to bveCVX, and like what was the logic driving those in terms of like the more competitive options on the market? Like what are the major changes there? And can you give us kind of like before and after snapshot of like the profitability before and after that we're projecting after this BIP is in place?
Sure. So before being like last year, the original idea with bveCVX is like we want to support yields on Bitcoin, so we're going to pay some Badger emissions and we're going to redirect some of the CVX CRV fees that we take from the sets, right, towards bveCVX in order to attract deposits, right? And then the idea was that those deposits would also be in our Bitcoin sets and we'd be voting for them and they'd get yields and it would be nice. So we fired that up. It was working good. Then Vodium came along. At first, it was kind of okay. The bribe premium wasn't, that good. People weren't using it that much. But it quickly got to a point where the bribes were high enough that convex holders were not really like looking to just kind of give their vote away, right? The bribes got high enough that people were like, no, like I want my money, and like Vodium is paying like 60%, and I'm making 20% on Badger and supporting this like Bitcoin set that has like, 300, $400 million of other people's money in it. And it just, it like wasn't working. So what happened is we came out of we saw, first of all, like our pool ended up, and I guess the second thing that happened, so we also had some big convex deposits from some whales. And then convex kind of mooned and started going down. Convex hit a peak. And so the other thing that we saw happen is a lot of the people that were actually holding Bitcoin or convex to support the Bitcoin and were in it, like they sold, right? They pulled out. So then at that point, we really had like no affinity left anymore, and a bunch of convex holders that were like unhappy but stuck, right? Because they couldn't get yields, but they were still kind of locked in. And then a bunch of Bitcoin holders that didn't hold any convex. So what we did was kind of acknowledge that was the case, right? And thought about moving. And so the option was like we could try to emit enough to the set to match the yields, right? So we could emit more Badger. We didn't have more fees to try to match it. But in the end, it was really inefficient, right? So we were emitting like flat Badger to convex, which then was getting like kind of watered down by this whole voting thing. And we were paying people and there were some bribes. And then those votes eventually ended up in a pool that like paid back the set. Right. But when we looked at it, it was like, you know what, we're losing, like, I forget what it was, but it was something like 50%. So we could have just taken the Badger that we were paying to the pool to pay for the bribes and the fees and paid it directly to IBBTC holders. Right. And it would have been way more cost efficient and kind of applied to Boost, which means that it provides people a reason for holding Badger. So it really, we just looked at it and we said, you know what, like this isn't working at all. So then over the last few months, we kind of shifted from emitting to Badger to just purely bribe selling. So now bveCVX receives no emissions at all from the Badger treasury, right? It's 100% self-sustaining. And basically the way that works is it takes 5% it votes every round for bribes, basically. 5% of the vote goes to buying Badger to emit to the LP, right? Which means that there's always a decent amount of liquidity for bveCVX holders, and it keeps the thing semi-liquid without the DAO having to pay to support that. Then 5% goes to voting for WBTC Badger, right? And then the other 5% just goes to the DAO as an operations fee to cover gas, to cover our work. So we're basically taking now a 15% fee. We're paying nothing in. 10 of that 15% fees isn't something that the DAO is actually taking, but it's feeding back in to support the Badger price and support liquidity. And everybody seems happy. The yields are looking good, and it seems to be working so far.
And do you have any projections over like how much more profitable it is under this new system?
So if you want to talk sheer profit for the DAO, let me think about it. So like last voting round, like 2 weeks ago, I think we paid about $70,000 to the DAO, right? But emitted like 20,000 CVX CRV and I don't even know, like a bunch of Badger, right? Maybe another. So in the end, like we made about, if assuming $2, 20,000, we made about $30,000 and then paid Badger emissions on top, right? After you take the CVX CRV out. The last voting round, we paid $34,000 in fees to the DAO, and there are no costs. So in terms of, if you don't take Badger emissions as a cost, right, then we're actually at about the same profitability. There's about the same net amount of like new non-Badger tokens flowing into the DAO. The difference is before we were paying a 15% AUM in Badger to the entire bveCVX set, right? So yeah, it's 30,000 a year or 35 million now. So I think that was like 3.5 to $5 million in Badger a year. And we're paying another 2,000 Badger or so to bveCVX LP. So the big thing that it means is like all of that Badger, right, which is there's 20,000 plus, I think, Badger a week in emissions, is totally cut, right? And instead we're buying Badger and we're voting for the LP, which like gives people a reason to buy it and put it in there. So to me, the big thing is like really you can see, and you know, maybe it's voodoo, but when I was looking at bveCVX over the last like months, right, there was just a steady, like for a long time, there were just withdrawals, like, or sells, right? Like you could just see very gently, it wasn't like big whale movements, but there was a general trend of like people trying to get out of the set, right? When we flipped everything around and stopped doing the Badger mode emissions so much, and through like this voting process where we were going through transition, when we started making changes, you saw that line turn around. So we went from like, okay, like the yield slowly leaving to like, okay, like now there's like yield slowly joining, right? And sure, there's some whales that ape in and out, but there was a pretty general trend. And, you know, maybe it's early for Badger, but if you look at the Badger token for the last 3 to 6 months, right, there's been a pretty against Bitcoin, there's been a pretty general downward trend. Mm-hmm. And somehow, like, and again, like it's too early to tell, but in the last week, if you look at that, right, the trend is also reversed. So to me, like, if we can hold that out, right, if the general, like, assuming no FUD or whatever, like if the general direction of Badger against Bitcoin is like up, then in my and this in that moment was actually what caused it to pivot, then like we definitely won.
Awesome. All right, Prince, I have a question for you. So you are not a member of the Badger team. You're not a Badger maxi. You said before that you're, you know, not necessarily even like major into Bitcoin or kind of like the Badger Bitcoin mission. And Tritium is asserting that bveCVX is now the best place for your CVX. So after these changes, which you are, you know, pretty vocal in the governance, you've looked at them, but you're also aware that now, like every week, there's a new place to put your CVX. There's Union, which will sell it and compound it into CVX CRV. There's Redacted. There's the LPing. There's all this stuff that you can do with your CVX. Do you agree that this is the best place, or how do you look at like the attractiveness of bveCVX in like the whole range of things that you could be doing with your convex now?
Great. That's a great question. It's really interesting because there was a time where I had locked VLCVX on Convex directly, and I had bveCVX, and like every day I was like waffling and checking kind of yield and thinking, is this the best place to put it, comparing against my gas costs and all that. And slowly over time I started trending more towards bveCVX, though I was like vocal, like, hey, these yields aren't comparable to Vodium, but there was a simplicity about it. I loved the liquidity, because I'm the first person, if a narrative changes on the protocol, I'll leave. And so just to kind of answer your question succinctly, when all CVX unlocked, I moved that all over to Badger. I'm heavily now in the Badger LP. I'll probably go back to just bveCVX because it'll be leverageable soon. So can't wait to ape into Rari with that. Actually, my Badger's on Rari, which I leverage, and so love to see the Badger price increase. And so again, to answer your question, all my CVX, other than some CVX ETH, which I'm leveraging on Abra, but most of all my single-sided bveCVX is in Badger. And in fact, I mentioned some of my Wall Street friends who I've crypto pilled in one way or the other. they're now in bveCVX LP, so, and we're talking about it, and it's funny, you know, it's been fun the last couple of weeks watching all the stuff that we own go up. It's been a long time since October. And my friend goes, "I'm even happy that you got me to buy this Badger token." Right?
Hmm.
So we're all having a we're all having a good time right now. And I, to Trit's point, I mean, this is, put the profitability for the DAO aside, because it's now profitable for the DAO every 2 weeks. If you're making $30,000, we can all do the math there. That's 700 some thousand going to the DAO. That's pretty good. Um, but the amount of Badger that's no longer just being emitted and sold, especially for folks like me who has a 2000 boost already, is a sea change. Like, I think even if the broader market wasn't experiencing some euphoria, I still think the Badger price would be up, just because that's a massive change in the direction of supply. Now, you'll still have some people who will sell the Badger when they get it, but that Badger was bought, right? So net, we're we're better off just no matter what. But I think with the added utility to Badger, the added utility for CVX, I think that we're going to see that 1.7 start to grow, even despite, you know, kind of turning on fees for the first time to that set. And then what I'll also add, just because I've been involved with governance now, I was just talking, the new governance for kind of the next round of emissions started. And when I looked at it, it makes a ton of sense. Like, to get pool capture up, you don't want to bribe, because everyone on Curve can benefit that. So you want to emit that Badger to people who are deposited on Badger. So it makes a ton of sense to turn off a lot of emissions, direct a lot of emissions to IBBTC, watch that pool capture grow over time. But what I noticed, I was like, wow, there's no longer any Badger emissions to CVX CRV. And that's the reason that I have Badger on Rari. It's the reason I'm leveraging it. And that's the reason that I'm holding it. I hold very few assets that aren't inherently productive. And Badger does, right? It gives you boost. But if we turn that off and I'm not holding any BTC, like, there'd be no reason for me to hold Badger, even though I'm super positive on all the directional change of Badger being emitted versus bought. And so had that conversation and went back, and, like, within a day or so, now we're going to go back to, again, let's emit Badger to CVX CRV. It gives reasons for people who kind of just curve convex maxis, who are using Badger as the best place to put their assets. It allows them to continue to kind of outperform. And for me, it's a way for the DAO to continue to accumulate CVX and CVX CRV with a gentle, through gentle purchases, using Badger. And so I just, again, the core team is super responsive to, like, I think, good ideas, and I think that's why, I have a lot of faith in the protocol. I plan, to be involved with Citadel, and I think when we get to the solidly part of the conversation, there's a lot of parallels there. But I look around at the Badger ecosystem, and I say that, there's been challenges from the hack to Bodium to everything, but man, I think we're starting to round into a good spot.
Yeah, no, I mean, I'm happy to hear you say that, because I do think, like, one of the things that happened during the hack was that it became really clear, like, like, we are a DAO, right? And the community has to kind of, like, make these decisions, right? And it shouldn't just be up to the team. In this case, it really can't just be up to the team. But I think, like, as we've, in this year, as we've explored, like, what bveCVX should become and, like, where to go with that influence engine that we have, right? It's been a constant ongoing conversation, which, Tok, you've been, like, one of the key members, and thanks a lot, right? And through actually, like, listening to our community and taking different ideas and bouncing things around, like, we found something that I think is really cool and it's going to work now, right? And this wasn't the team's idea, this wasn't my idea, it wasn't like somebody, like, just put their hand up and said, hey, let's do this. It was, the product of, like, a 3-month conversation and a lot of people, like, feeding in a lot of input and making a lot of different decisions. And then in the end, like, we came up with a good product that works well and makes sense and people want, right? And, I think, like, that's I think like as a Fair Lunch DAO, and we say at Badger, like we're a community of builders, right? Like that's very much to the root of what we are, and that's the thing about all of this that makes me the most excited, and I look forward to doing more of it.
Awesome. So I know we've got a lot of stuff on Phantom to get to, but just quickly, like you mentioned Rari, what are I guess both of you, like Prince Tok as a user, what is like the one thing or two things you would love to see us roll out for bveCVX, and Tritium? Like, what do you think is the future? Like, what extra value could we layer on top of this to make this even better?
So I guess I'll start. Again, I'm in finance. I view everything as kind of a portfolio value and portfolio allocation. And the more utility a position has for me, the higher my allocation to it can be justified. And so unlocking equity in an interest-bearing token is what first drove me to the Abracadabra protocol. I thought it was like a huge innovation, and you've now seen more and more protocols that will allow leverage on assets that are also earning you. I think composability is one of crypto's greatest strengths. And so having this wrapper, this bveCVX that's generating yield and being able to unlock equity inside that while maintaining the asset, to me is the most important, is just one of the most powerful things. Now, granted, when the markets are down, so I'm leveraging a lot of my assets, and when the markets are up, that's great, pull more equity, and when markets are down, every day I'm monitoring those, right? And so there's that push pull, but I love it. I love unlocking that utility. And so I was, part of the BIP 87 was when that first was proposed, there was going to be two different ones. One had utility, one didn't. One was cheaper, one's more expensive. Not only does that added complexity, I think, make it harder for folks. There's a lot of us spend a lot of time in Discord figuring this stuff out. But for the smooth brains out there, I was like, hey, we just want to, we should make this as simple, as easy a place to put your CVX and have as much utility as possible. And so I think the integration with Rari, having Faye, Dai, the Dala team also partnership, I just think that that's going to open up just so much more people who are willing to not only place their CVX here, but not only are going to be more willing to hold Badger again, because it's not directly interest bearing. Now there's VE conversations, etc. But I think that utility is critical. And to have that in place with a respected partner with Rari, I think is only going to continue to benefit. I think there's going to be a conversation over time. It's like, man, we need more stable coin liquidity in the Badger pool, because people are really there's going to be a lot of uptake.
That's good. We have a thread in our internal team Discord that's just called When Rari. So Tritium, When Rari.
Soon, Petro's doing Rari now, but I think it's like queued up in the multi-sig, like in the next days.
Yeah.
And so then I guess just to reflect on kind of like where I think we're at with bveCVX. So something I called it like the great flush, right? But like I think everybody's aware of this. About a month ago, Convex had some bug in their locker. I'm not super clear on the details, but what they ended up doing was unlocking all of the tokens at once. So like one of the things that I had spent the last like 20 weeks trying to do is think about like our unlocking schedule, right? And doing like whatever I could to try to like nudge tokens to have like a nice clean curve so that like over the coming weeks, there would be something unlocking. And then of course, like everything unlocked and everybody deposited all in 1 week, right? So that was kind of 20 weeks blowing, but it's okay. But fundamentally, like what happened is, that we were in a environment where people had like locked over time, and then every week there was stuff unlocking, right? And people were like farming and earning more. And so there was like always like beyond like DAOs trying to buy a little or like the market, right? There was always like free convex unlocking and relocking.
Mm-hmm.
Fundamentally, what happened over the last month is that everything unlocked and everything relocked. And so the way that I see it, like the potential to actually get a lot more convex for the next 16 weeks is pretty low, right? Like everybody's where they're at. Mm. So if we think about like where more convex holders would come from, they would either be like DAOs or somebody that's trying to like buy a big load of CVX for some utility, in which case the new bveCVX isn't very like attractive to them because it's more about like yields, right? Or I don't know, like some VC is like, hey, this is cheap and I'm going to just buy it and farm it. And so maybe we'll get that. But I guess the moral of the story is like, no longer am I really focused on attracting a lot more bveCVX deposits, right? Like that's kind of a done deal. We need to make sure that the people that are there are happy, right? And want to stay there in 16 weeks and tell their friends about it who also want to come in 16 weeks. But I kind of think in a lot of senses, like bveCVX is now in maintenance mode. I mean, just to throw out like two ideas that we've talked about, but I'm not sure we'll do it. Like one idea was to do like a Badger union type thing. So the idea would be even if you had VLCVX, you could delegate your rewards to Badger and then we would auto compound it into bveCVX for you. It's like we could do that, but it's a big tech lift and kind of Union's already doing it. And I'm not sure that it's at the top of our list. Right. And then I guess, so the main thing that I think about in terms of like bveCVX influence, the curve wars and Badger now for the next, like epoch for the next 16 weeks is that fundamentally, like since curves convex started, like we've been trying to figure out how to like utilize and maximize this influence environment in order to try to get single asset yield or yields on single asset Bitcoin, right? Which I lovingly call trying to squeeze blood out of a stone, because as soon as you create them, like $1 billion in Bitcoin like apes into it, and then there's no yields anymore. So like in trying to do that, like we've tried everything, right? Like we've taken influence plays to like in all sorts of different directions to like their widest extents. Like we've gotten in like big fights with like convex about like trying to like, build this gauge on bveCVXLP and, like, oh, that's like too strong. And we were like, yeah, but like we're fighting a losing battle here, like we just need some way to get in. So in my mind, the real play now is that, and as I said earlier, I think, for a lot of protocols, curve is too late stage, right? It's too expensive. It's too big. There's not a way for them to get in. And what you see is like, whether it's like Balancer or I think like Beethoven is doing it on Phantom, you're seeing more and more protocols launching, I guess Solidly is the example we're playing in now, but launching, more and more curve-like, AMMs that have this like curve-like governance model of deciding emissions. And then more and more of these like meta governance layers like Convex or OXD or SolidX popping up to manage them, right? And I think like the number one learning that we had is like, if you can get in very early during this LM event with influence and create something where people can like auto compound that influence asset, right? If you can have like the bveCVX in a sense that we have now that just very quickly auto compounds it very right at the beginning, then there's a potentially the way that you can get a lot of attention, capture a lot of influence, right? And move from there. So right now we're working in Solidly. I'm not sure if that ecosystem is ever going to like blossom into a multi-billion-dollar ecosystem, but it's a great place to test and learn. And so what we're doing is building like bveOXD. I think that'll be out next week. And then that is because we were able to get a gauge for it, right? So then there'll also be a bveOXD OXD LP. And bveOXD will basically always vote for that LP.
Let me stop you there. I know, so we've been, if people have been listening to us geek out about the stuff for 55 minutes already, probably they know what's going on with the Solidly, but like, let's kind of like set it up a little bit. So we are basically taking this convex curve playbook to Phantom in this new protocol, the Solidly that was just released, and the kind of satellite protocols around it. But I don't know, Prince Tok, if you want to take this, or Tritium, but like give us like a quick 30-second overview of the launch of this, what happened. It's kind of like the biggest drama in DeFi the last few months, but like for someone who just wants a refresher.
You want to kick it off, Trey, and I'll jump in?
Sure. Okay. So Andre Cronje, who was the guy that started Yearn and then left, he starts lots of protocols and then leaves. Spent a bunch of times tweeting about this Solidly thing. The idea was it was a curve. He built a new kind of market maker, new like actual math to do the market making, right? Which he thinks is more efficient. And so there was some cool new market making tech. And then on top of it, Andre was trying to combine, like, I think, curve tokenomics and ohm tokenomics, right? And he did this thing called VE33. But the idea is that you have this solidly token that you can lock. It's kind of like curve-like, and you have this ecosystem where, you know, you've got gauges and you vote on the gauges and you're distributing rewards. And then the VE thing was that, like, the solidly, which is their curve that's locked, rebases up. So when your solidly is locked, you're also getting some upward rebasing. But fundamentally, it was launching a curve-like thing on Phantom. And the big thing that was interesting and different about it is that it was permissionless from the start, right? So if you think about Curve in its development, right, at the very beginning, like, other protocols just couldn't work with Curve at all, right? And I don't think, like, you could add pools so easily. Like, you had to go talk to the team, right? And then slowly over time, they, like, whitelisted Convex, which then, they whitelisted Yearn, they whitelisted Convex. Then Convex had this, like, special position where they were able to do something somebody else wasn't, which allowed them to, like, very quickly, basically kind of take over Curve or end up in a competitive position, right? And then Convex is also permissioned in that if you want to bring up a gauge, right, there's a vote. So if I want to bring up a new gauge, like, Convex and Curve and everybody has to vote on it. And if the DAO doesn't agree, the gauge doesn't exist. So the big experiment, I think, other than this new market maker that was coming with Solidly, is that it's totally permissionless, right? It's like you need, I think, something like 300,000 solid to whitelist a token. And then once it's whitelisted, anybody can start a gauge, anyone can vote for it, any protocol can interoperate with it, which means that, like, day before Solidly even launched, you know, whereas Curve was Curve for a year and then Convex came in, like, the day Solidly launched, there were already two protocols, OXD and SolidX, that were both kind of fighting for that meta governance position, right? So it's very similar to the Curve Wars without the gatekeeper, which we find super interesting. I don't know, Prince, you want to add a little, or Talk, you want to add a little there?
Yeah, no, I think the unique part was combining a lot of the tokenomics that have been developed over time, combining that into one protocol. Now there's questions if we got some of the math wrong and the avoiding dilution aspect, but it was unique from that aspect. But I think what made it the most unique is how it was about bringing a federation of protocols together. I think, you know, it's now, despite all the challenges, I think it probably has some of the deepest liquidity on Phantom. I haven't looked at those numbers in a while. I got wrecked by Andre and Rugged, and so I exited the ecosystem with my tail tucked between my legs. But so I'm not keeping as close up to it, but obviously I was for a while. But bringing all the 25, which I think ended up being 26 protocols together, most native, some, you know, kind of just popped up to take advantage of a snapshot. But it was about aligning an ecosystem together, which I thought was super interesting. And in my head, I parallel that to Citadel, bringing a federation of protocols together under one mission. So I thought that was quite unique. And so there was a lot of interesting things there. I think I share your view on the Phantom ecosystem, and this is probably kind of my ETH preference rearing its head. I think, like, protocols, I think blockchains like Phantom and Avalanche and others will be around. They're not going to zero, but I wonder if we've already seen kind of their best days already, but who knows? But there's a lot of things from Solidity to unpack. And I think a lot of those were actually unpacked when I look at the tokenomics for Citadel, and I know this isn't a Citadel talk, but when I look at the tokenomics for Citadel, I think that they took, you know, what Solidity was doing, what Curve, Ohm, others have done over time, and continued to expand on it. And so, you know, those are the most interesting things for me, is more of a takeaway for what was definitely a test and production type launch.
Do you think so? You said that Solidly was successful in getting really deep liquidity. Do you think that is just because everyone's farming the shit out of it at the launch, or do you think it's going to be able to retain that going forward?
So I think, you know, like, let's be honest here, right? Like, at least 50% of crypto is hype, right? And so, like, I think that, like, Andre is like the golden child that always rugs, right? And so he was golden childing. Everybody was super excited about it. Like, like day one, it was like there was like $2 billion in it, right? So there was like a very large initial ape in, right? Then I think some cracks started showing themselves, which weren't big deals, right? But it's not perfect, and there are, and it's not upgradable. So like you're kind of stuck with it, right? And then Andre was getting shit, and he just kind of like ghosted, and like I think he's already half back now. But the whole thing just kind of blew up, and the whole hype bubble popped. Like it was like the shortest, I guess, or the smallest hype bubble ever, right? It lasted like a weekend. And then it popped. And so now you still got a decent amount of like liquidity there. And in the end, like a lot of it depends on like a few whales and what they're doing with like solidly and like how much that token's valued. But you also have like actually very efficient market making. And so, yeah, I think, somehow I doubt, I guess if like the Andre had remained the golden child, like the Phantom SolidX bubble could have lasted quite a bit longer, right? But I agree, like that this is about learning, right? This is about a whole bunch of new tech and a whole bunch of new strategies that can be deployed on that new tech being experimented with and learning about it, right? I think in the end, like if solidly becomes an enormous thing, it's going to be somebody that takes it, makes a few changes, launches it on another chain, right? So I don't think that this is the place where suddenly you're going to have like an AMM as large as Curve, or like suddenly Phantom's going to become like the number 3 chain or something. But there's a bunch of active developers. There is money there, and there's a bunch of active developers that are doing stuff there. There's a very engaged ecosystem of like smart, very like Deegan people that are willing to like try stuff and discuss stuff. And so like there's no better place to like test and learn and like work out playbooks for the future, right? Whether that's in an environment that looks just like this, or whether that's in some other kind of like an influence environment, like on top of I keep bringing up Balancer, but I think they're working on something like this soon. I know like Beethoven, I think, has something like this. So it's popping up all over the place. And the sooner that Badger can get to the point where we're like, okay, we see that this is happening, like we can go through our playbook. We see what the dynamics of this game will be. We can pull this out and like day 0, here's here's a locker, and here's like a whole strategy for farmers, and here's like a way that other protocols can actually interface with us in order to like grow their own influence, right? And so just getting that all worked out and tested and being ready to go, I think, is like the most important thing we can do right now.
Yeah, I want to move on to the Badger stuff, but like just on that, like I personally, the thing I can't get over with it is the 0.01% swap fee. And so like Tritium, you're the one who got me pilled on Uniswap 1% pools, right? Like as a liquidity provider, like I want to be in the 1% pool or the 0.3% pool or whatever, like getting some nice trading fees. I just don't see like as an LP without like a shitload of emissions, I'm not going to get excited providing liquidity to earn a 0.01% fee. I just don't see how the liquidity sticks around after this liquidity mining event.
I don't really either, but like if you go to solidly.dev, I think, right, which is their V3 portal, right, you can, and maybe it's just wrong, like it shocks me, but and you go like to the pairs and you can like sort by 1 year liquidity over fees, right? And like a bunch of these pairs are like getting 10, 20, 30% in swap yield. Again, I don't understand how it works, but I think part of Andre's, like the real brilliant Andre's stuff here that like nobody but him will ever understand is that like if these market makers are so efficient, right, that they're absorbing 90% of the swap volume, that there's a lot of volume that's able to go through it with a lot less liquidity, right? Then even if you're taking a 0.01% fee or whatever, right, if you manage to suck up all of the volume, right, that seems to add up. So I kind of agree, but then again, maybe this site is just wrong, right? But I'm seeing like Phantom Solid is yielding like 300 to 500% in like swap fees, right? That looks pretty good to me.
Wow.
That seems
Prince
high.
Tok.
I was always thinking about that too, because you have a low fee and then you're on a low fee chain. How does that work? And so it was all about emissions. But if those numbers are right,
I
they
think,
are what they are, right?
and I think on a low fee chain, so two things. First of all, people swap a lot more. People are just like we transacting,
Yeah.
right?
Yeah.
And then there's a lot more protocols. There's a lot more liquidity. So there's liquidity all over the place. And then the cost to ARB is pretty low, right? So
Yeah.
for a bot to just like ARB two pools, like for a small amount of money happens. I don't know, but somehow, it makes no sense to me. But when you look at these numbers, it seems like charging very, very, very small fees, you're managing to get pretty decent returns. And so,
Yeah.
I don't know, somebody else can write a paper about it someday. But that seems to be.
All right. Well, if they are getting that fees, Prince Tok, I'm sure you and your Wall Street buddies are going to find out the best way to harvest those, right?
Exactly right.
All right. So wait, let's talk about Badger. So, like you were saying before, the key, like everything in crypto, everyone wants to be early to something. So this was like the opportunity for us as Badger to get in early on one of these protocols that has owning the token gives you governance over the emissions, which is like the same idea as the curve convex thing. So how did we kind of apply our learnings from curve convex to the rollout of the vaults that we launched on Phantom in the Solidly ecosystem? And how's it gone?
It's been hard, right? Because the goal from the beginning always was to do the thing that Convex didn't let us do, right? Like the thing that I want to do is I call it the influence black hole. But this idea that you have a BVE, whatever, bveOXD in this case, right? That votes 100% for its own LP. So the more the deposits go in, right, the more vote it gets, the more the yields go up, and it can kind of just spin up, right? And then finding ways to like in a smart and economically based or kind of mathematically based way, start allocating some of those votes to other things based on, things that are beneficial to the locker. I'm super interested in that. And so like for me, the moment this thing popped up and it was like, okay, this is permissionless. Nobody's going to stop us from doing this. Let's do it. That's been the goal. The problem is that like, so at first like SolidX was up right away, but there were some questions and we were looking at it and like the code was like a little bit iffy and we weren't sure. And then OXD was like working on stuff better, but they were like coming pretty late. And then like Andre Rugg. So like we've launched or we've started working on a lot of different things, but it never was super clear what to do. We ended up launching like a bunch of vaults. The one that's got the most deposits is like Weave USDC, and then they stopped like voting for it. So it was all just pretty messy. Right now, the focus is bveOXD, right? So I think what we learned is, or the decision that I came to, I think most of the team came to, is like, like in terms of the hype or the punctuals of this ecosystem, right? In terms of like whether this token's going to go up and down, whether there's ever going to be a significant bribe environment, like, like what the actual play is and how important timing is and like exactly the moves to make, right? It's kind of like, who knows? And like, even if you figure something out, it's not so likely to work so well another time because it's just such a crazy situation. But at the same time, just getting ready. So like to me, like what we're learning is like we're getting this bveOXD locker up, right? We're working on getting it out so that there's an example of what it is and people can understand it. We're working on getting documentation together. We're working on getting like a playbook together and really understanding the whole thing. So that hopefully the next time something like this happens, right? Like we can be there day zero with a locker that's up and ready to go and clear messaging and just really like, like hit it day zero and really be there, be strong, like have everything together, have a compelling message and really just try to get a decent amount of governance or influence at the very beginning, which then, through what tends to be generally like a fairly short, like a few weeks to a few months liquidity mining period where tons of tokens are released. If we have a strong like system that's just feeding itself and sucking in the tokens, and we can hold that through an initial liquidity mining event, right, then we're in a really strong position and can start playing with the next step. And so I'm primarily just focused on making sure we've got a good playbook there and we're ready for next time. And, like if something happens in solidly land where there's an opportunity to really jump on it and attract some real AUM or make some money, then like we'll do it. But it's hard to see through the woods or clouds or whatever you see through there.
So Trick, can I ask you a quick question? I don't mean to take your role, Wasabi, but Badger's about bringing BTC to the Ethereum environment, right? And so it's a DeFi. Yep. And so that's right, DeFi. And it seems like, it probably made sense to explore the Phantom ecosystem solidly, et cetera. But as you described, it's been messy. Does that discourage kind of that experimentation going forward when we're still kind of trying to optimize on mainnet, and we're not on layer 2 is kind of starting but not. I'm just curious, like
not at all.
That change the focus?
I think our learning is so Badger's mission is to bring Bitcoin to DeFi. In trying to do so over the last years, we've also become like masters of influence in a sense, right? So we really have a lot of technology and understanding and a community that understands like how these influence games work. And what I mean by influence is like curve, convex, right? Kind of curve war-y type stuff. And then, as I said, trying to get single asset yields on Bitcoin is like squeezing blood out of a stone, right? And so like if we actually want to successfully squeeze blood out of a stone, like we have to like become even greater masters of influence, which means that like every one of these plays we need to test, we need to learn, we need to try to do things. Going back to yields on Bitcoin and DeFi, the real issue is that like there are a lot of players, like very, very big players. Like Celsius is just one of them, right? That are promising 3%, 4%, 5% yields for Bitcoin, right? And have all these deposits and then need to get that somewhere. So like the reality is if you look on any environment, I've been paying attention, any like pair where it's like Bitcoin, and there's like enough, it's not like super, super shady, right? Like the yields are down to like 1 or 2% almost immediately. So I think, like for me, finding yields for Bitcoin on DeFi means that like we need to move away from like this very simple single asset, like you stake 2 Bitcoins that trade against each other, right? And find places where there's a little bit more risk and where like people are going to have to do more, and where, so first of all, there's some barriers to entry, and second of all, there's more yields, right? One interesting thing, and like I don't think we're going to do this anytime soon, but I've been thinking about it, is imagine like if Badger were to take solidly the code, the AMM, right? We were to launch it on, say, Arbitrum, right? And then we had some deal where like everything that was paired with Bitcoin got an extra 20% on its vote weight. So you create an AMM environment where there's a strong incentive for pairing everything with Bitcoin, right? If we could build that so that now there's, like a few $1 billion in something Bitcoin pairs, right? That starts to create a super interesting environment for Bitcoin and DeFi. That starts to create like a demand for people that want to pair Bitcoin with something, which means that like maybe they actually borrow some of it from like a lending protocol that just has everybody's Bitcoin deposited into it, right? That creates yields on Bitcoin. So I think, and the long-term, how do we actually generate yields for Bitcoin on DeFi is like about like tinkering with the entire ecosystem. And I think like our steps over the next 3 to 6 months are continuing to run these plays on solidly on whatever other environments we can find and becoming experts in it, right? So that we end up in a good position to do that.
And the other part of this is the vaults that we launched on Phantom. One of them was the Bitcoin auto compounder, which is like Ren BTC, WBTC, or something like that, like a LP of 2 different types of Bitcoin. And we use that as the destination for farmed rewards to be sold and auto deposited in that vault, right? So like on one aspect of Bitcoin and DeFi is like, okay, earning yield on your Bitcoin. The other aspect is like, okay, can we farm stuff and then auto compound it for users as Bitcoin?
Yeah, I mean, I don't think as is those vaults are working very well. One of the problems is that the Bitcoin pair on SolidX is like 0.5% returns. But yeah, I think Badger vaults are different in that we're able to emit these helper tokens and stuff, right? So one of the things that, and we played a lot with flywheels around convex, so this emits that, emits this. I think we're very interested in this concept of like DCA vaults, right? So a vault that farms something and then emits Bitcoin. And we're super interested in how to play with that. I think the challenge is how to present that to users, right? And how to get that in a UX with other vaults, right? And how to like create a coherent, like this is the product. And again, I think Solidly is a good place to play with it because it's cool and we can play with stuff, right? But I don't think that there's actually sufficient like yields or pairs there to like make that work. But that being said, like I do think that is another, you're right. That's another take in like how do we bring Bitcoin to DeFi? And it's these kind of DCA vaults that like generate Bitcoin on yields. And I think like over time in our community, over the next like 3 to 6 months, like we need to talk about like what kind of products people want and how to group them and provide them, right? And really figure out like the right fit and affinity with like users for that kind of a product. But I think there's a lot of potential there.
All right. So I guess we've gone through kind of like the case study of quickly spinning up the Solidly vaults, what we've learned. What do you think are the next candidates to be one of these like yield influence ecosystem that's going to be big in the future? Like Beats is one we've talked about. Are there any others on your radar?
I mean, my understanding is that Balancer is about to like launch such a thing. I'm not sure who else. I think right now on my list is kind of like Beats and Balancer. And then again, maybe we're not looking enough at side chains, right? Like I think one of the other challenges is figuring out like we're working on something called Chadger, right? And the idea of Chadger is that it's like a very simple UI. There's not like a commitment that we will harvest the vaults, but anyone can harvest them, right? And there's no limits to who can launch a strategy. So that means that like any dev, any strategist can take Badger code and can go launch something that has no guarantees, right? But what it means is that like we can start standing up like a basic Chadger setup on a lot of different chains, right? And then give both our devs and like bounty devs and, in the general ecosystem, people the chance to like launch a bunch of stuff and then market it themselves, or we can like kind of play with some of it. And then when we start to see things that are working, things that are sticky, things that like people are interested in and that like seem like they make sense, right? We can, in a separate conversation that has less to do with technical implementation and more to do with like presentation, have conversations about how do we like pull this like nugget of glory, right? Like out of Chadger land and find good ways to present it to people, right? And that should really help us, I think, explode quickly onto a lot of chains, explore opportunities all over the place, right? And then be able to like quickly pick the things that seem like they're going to work and like develop something compelling to push out to the market. And so I kind of, for me, like that's a lot of what Q2 is about, is getting that ability to like really rapidly test and prototype things all over the place. And then also like really refining our ability to take our learnings from that and make compelling products.
Awesome. So we've been going for a while. I want to bring this in for a landing and get a final nugget of alpha from both of you. But first, Prince Tok, I'm curious to hear about your take on this. Like, you're a user of Badger. You're not, you're in a bunch of different DeFi protocols. What do you want to see us build? Like, what would you be most excited to ape into with your Wall Street friends?
So I've mentioned it a few times. I'm really excited to see kind of what happens with Citadel. I love the innovation in tokenomics. I realize maybe I probably am slightly underweight, BTC exposure is kind of, a bedrock of a portfolio. And so I'm excited to get that through there. So, I'm whitelisted on a number of protocols for Citadel because, you guys got the big ones on mainnet. And so I'm first and foremost, and so that was kind of my question around, it. And I love Trit's answers about mastering and refining your influence ability. But I'm really interested in and hoping, and I know the DAO is really focused on on the Citadel launch, because I think that is going to have a tremendous amount of positive upside for Badger. So I think, as we mentioned earlier, I think CVX is in a good spot. I think it's a great landing spot. I think it'll grow over time, and it's now profitable, and we can turn to generating yield on IBTC. But I think that will largely come with the launch of Citadel. So I'm just like patiently waiting to ape over here, and I'll be sure to show my friends like BTC a little bit more than I do. So I'm sure we'll be collectively providing some capital there.
Awesome. All right. So in closing, want to ask each of you for a piece of alpha. I know Tritium, in an earlier podcast, you were talking about Uniswap Uniswap V3 pools, and I've been having some luck with those. I think especially like on side chains where you can auto compound a lot faster and cheaply move your ranges around to keep it really tight. So that was some good alpha, but that was last week's alpha. So give me some new alpha this week. What do you got for us?
Man, I don't know. I've been so busy like badgering. I haven't really been trading. I've been losing my ass unsolidly. Like I can tell you all sorts of different ways to lose.
Yeah, I think we're all down bad on those plays.
That's not really alpha anymore. I mean, my alpha of the week right now, frankly, and again, is like WBTC Badger on Curve, right? It's yielding 200% at the moment. We're voting for it with like 170,000 votes every 2 weeks, and that should sustain. Yeah, I don't really know. Like, I still haven't mastered the curve math enough to figure out like what the yields will eventually be with how much, but I think that'll be juicy for a while. Yeah. And unless like Badger crashes, maybe it's like a good way to save up on some Bitcoin that you can then pull out of LP and whack in Citadel later or something. But yeah, I don't know. Right now, that's most of my moves recently have been moving into Badger LP on Curve.
Awesome. Prince Tok, what about you? It doesn't have to be Badger related at all.
Yeah.
Like what are you excited about now? What are you aping into?
Yeah, so I won't do this isn't financial advice. I think anyone who just follows trades me is an idiot. And so I'll put that out there. First, I'll just give like something that a friend shared with me, more high level. It's not a protocol specific, and it's always resonated. And it's one of my Wall Street buddies. He said, the whole DeFi and crypto thing is a lot more fun than he anticipated. He said, if he could actively, design what he'd enjoy, it's like a little bit of gambling, but enough analysis and conviction that makes you feel like it's all skill. And so if you're not having fun with what you're doing in DeFi and it feels like work, or you're not having fun in a protocol and it feels like you're kind of when can devs do something, like just get out. So that's the first just piece of advice. If you're not having fun in something, like there's so much going on in crypto, go find something else. And so that's always what I try to come back to is, am I having fun doing this? Making money is great, but there's so many different ways to do that. But I also say is that I'm just super high on productive assets. So things that are generating yield with, what one of my buddies calls real yield. It's not emissions, but it's whether, some Curve is a bet on transaction fees. I'm heavy into, and so I guess to name a protocol, I'm heavy into GMX on Arbitrum because they're generating real fees based on, perp trading. So find protocols that are generating real yield and passing that back to users is a really interesting thing, and what I always tell people to focus on. Be a revenue maxi. So I dropped one protocol, but more just kind of high level. Find things that are generating real yield and ape responsibly.
Awesome. Well, Tritium, thanks so much. But Prince Tok, especially, like, huge thanks for joining us today. I mean, you, like how Tritium and I started out, we're just like random dudes in the Discord and getting more and more involved and making your voice heard about issues related to Badger, and it turned into giving us some really good advice that made it into several bips and part of the kind of like feedback loop that helps us improve the protocol. So thanks so much for your time and everything that you've contributed.
Yeah, agreed. Thanks so much for your feedback recently. It's been
It's sure
nice to have people that are in our community, they're outspoken, and then they're also constructive, right? Because somebody that's like obstructive and outspoken is a pain in the ass, but you're great.
I try not to be a pain in the ass. So appreciate you guys having me on. This was fun. It's my first foray into podcasting. So appreciate it, and I'll see you guys in the Discord.
All right. See you there. BadgerCast is a production of Badger DAO. Real quick, before you go, please leave us a like or review on your podcast app of choice so that other Badgers can find us. And if you want to learn more or contribute to Badger DAO, the best place to get started is in our Discord server. Just go to www.badger.com and click the Discord link at the bottom. Thanks for listening, and we'll see you next time.